Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points.
In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that at the moment we have a market which is testing a quite strong monthly support and demand area. In fact, this level has been acting as historical structure for quite some time, first acting as resistance here, preceding all these rejections to the downside, and then after the market broke it to the upside with this impulse, it was turned support here. And at the moment, the market is testing this previous monthly resistance turn support. So there is definitely the possibility to see some more bullish price action being created away from this quite strong support level. We can also notice that from a pattern standpoint, we have a very clear impulse followed by this correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how the level that the market is currently testing is exactly the zone in between the 0.32 and 50% Fibonacci retracements, which is also lining up with the previous horizontal resistance turn support that we have just identified. This means that actually we have confluence of support inside of this zone because there are multiple layers of support lining up in the same area of price. That is the definition of a confluence of support area. And inside of a confluence of support zone, there is an increased probability of getting institutional longing, which at that point would further increase the probabilities of a potential push higher away from this area. And we will be speaking about institutional longing later on into the analysis when we go and see what we have when it comes to the order flow. Dropping down on the weekly time frame, what do we see? Now, from a weekly perspective, we can see how there is some structure being created also here on the weekly time frame. This area, in fact, has been acting as previous weekly resistance, preceding all this rejection to the downside. Then the market broke above it, and that previous resistance was turned support here, again support here, and now the market is testing it again as support, has already started rejecting it to the upside, and in a situation like this, we could expect more bullish price action being created away from such level. Going down on the daily time frame, what do we have? Now, here on the daily time frame, this is where things get quite interesting because what we can notice is that at the moment the market is testing quite important structure. This zone, in fact, was acting as previous support here, turned resistance here with the creation of this red candle. Then the market broke back above the zone, and that previous resistance is now turned support at this level. Now, since the market is testing previous daily resistance turn support, it seems like we have good probabilities that from this level we could see more institutional longing, which at that point would further increase the probabilities of a potential push higher away from this level. I also spoke about gold a few days ago when the market was around this area and explained all the reasons for which we could expect this rejection to the upside. And in fact, that is exactly what the market gave us. And by the way, you will find that previous analysis linked in the description, so you can go and check it out for more free education. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, so what hedge funds and the big players in the market are doing and how they're moving their orders, and we check the data precisely for gold, what we can see here is that with the very last report, net positions once again started increasing. We went from having 131.1k net positions up to 140.2k net positions. So we have seen an increase of the net positions, showing how institutions once again are starting to move back to the bullish side for gold, therefore making it stronger. So there is the possibility that since we are also inside of a daily support zone, especially if the market will continue a bit lower, we could see more institutional longing, which at that point could further increase the probabilities of a potential push higher away from this zone. So what I would expect in a situation like this? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, at that point I wouldn't be surprised to see a potential push to the upside, completing this daily impulse correction and impulse pattern to the upside and rejecting this daily support. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.